Have you ever wanted to amaze your friends with your knowledge of real estate in the greater Columbus area? Well, if that's the case, stick around. I'm going to give you superpowers next. Hey RT family, Ryan Reynolds with Keller Williams Consultants Realty with your March 2025 real estate market update. So what's going on here in March of 2025? Well, as usual, we're going to talk about the three things that drive the real estate market here in Greater Columbus, and that is going to be inventory levels, interest rates on the 30-year fixed mortgage, and of course, what are sales prices doing and how much is your house worth this year compared to what it was worth last year. Now, this month, I'm going to take a little bit more of a deep dive into the national statistics as well and kind of give you even more education, so that's where the superpower part comes from, and we're going to jump into inventory next. So when we look at inventory levels in the greater Columbus area, this graph on the screen here is going to show you that inventory had actually grown toward the end of last year and really maxed out in probably November in terms of the amount of inventory compared to the number of homes sold. Now, since that time, the total number of houses on the market has come down, and actually the number of houses that are selling has started to increase in the past month. And so we are at 2,705 houses on the market as of the end of February. Now, what does that mean? Well, it means that there's actually houses on the market to buy. There's about twice as many houses on the market as there are selling, which will give us some rough inventory numbers of about a month and a half to 2 months of supply. But all these statistics are going to be very specific and change when we look at different neighborhoods and all, but this is the greater Columbus number. So one of the things I really love about Keller Williams is that we have a lot of research and a lot of data out there. And so one of the things that we talked about at our national conference are national inventory levels. But when you look at this graph, you can see that we have been below the dotted line, which is the balanced market line, for a long time. We went into a deep seller's market in 2021, and we've been climbing kind of out of that ever since. One of the things I get questions about all the time is we can have a glut of houses coming on the market and have the real estate market crash. And the answer is no, and this graph on new home starts shows you exactly why. The dotted line there is the long-term average of the homes that we need to build annually at about 1 million homes a year in order to keep up with population growth and that kind of thing. When we look at where we went from 2008 through 2020, even 21, we had been building below that line. So there's this huge area of space underneath that line that needs to be made up. When you look at the last few years, we've actually been only above that line for 2 years, and that would have been 2021 and 2022, so we really aren't catching up anymore. And so from a national standpoint, the reason why house prices are going up so much compared to what they used to be and why the affordability is getting to be pretty bad is because we just don't have enough houses. That's basic supply and demand. There is just not enough supply. So that's where we are with inventory. We have about a month and a half to 2 months supply here in Columbus, and we are in a mild seller's market, but I think this spring will probably be going into that stronger seller's market. The next thing I want to talk about are mortgage interest rates. And again, we're going to talk about both what's going on today and what's going on, or what has gone on in the past really long time. Though currently mortgage rates today are sitting at 6.82. And if you look at this graph, last year we were really close to the same number as we are now. And that has been based on a couple of things. The biggest thing it's been based on is inflation. The Federal Reserve has not wanted to lower the interest rates because the inflation has been too high. But now inflation is coming back into line, and actually there's a lot of negative things happening in the economy with tariffs and with layoffs from government agencies and things like that, which is actually good news for mortgage rates, because the less good news in the economy, the more lower the interest rates will be. I know it's kind of a little bit of a backwards thing to talk about or think about, but that is the case. So when we look at this graph, there's a couple things on here I want you to see. So the blue dotted line is the historical average from 1972 on to now, and the green dotted line is the historical average from 1990 until 2024. So if you feel like home prices or mortgage interest rates are high, it's probably because your perspective is only for the last 15 or so years, and that we are above the 6% average at 6.8. When we look at longer term though, that's where you get those people that have the different perspective that we're actually quite low at this point. So our projection for 2025 is that rates will continue to float down. Will probably be around 6.5% by the end of the year, and that will actually continue to improve the real estate market. So that is mortgage interest rates. Now we're going to talk about home prices, the thing that everybody wants to know. According to the most recent data as of February, the end of February 2025, the average price in the greater Columbus area has been $324,000, and that is up 3.8% year over year from $312,000. So now when we look at the national chart, what we're going to see is the home prices annually for the last year in 2024, we're up about 4.5%, and then in Columbus we were up about 6.5 to 7%. This year they're predicting an increase of about 2.5%, which is the yellow bar there, but we are already up 3% year over year. So I suspect that we'll actually be above, again, what the national market is doing. And I think maybe that's the biggest message I want to tell people today, is that Columbus is not the national media or the national numbers. We have a ton of stuff going on here, from Intel to the drone factory to all the data warehouses to lots of logistics and financial services and retail. We have a very diverse, and government, a really diverse economy here, and people are continuing to move to our area. So if you have questions about your specific situation, please feel free to reach out. Again, I'm Ryan Reynolds with the Ryan Reynolds team at Keller Williams Consultants Realty. It's unlimited opportunities and exceptional experiences.